What's up, guys? Sorry, my Periscope crashed on me the first time I was trying to do this. So guys, share the feed right now. I'm gonna turn this back onto the whiteboard. What I want everybody to do is I want everybody to write down what they see here first before I start a very little lesson on stochastics for you guys. It's been a while since I educated you guys, I am in the process of been working very hard to launch mentor tips. We're working on it now. We've been working on it all day. And I figured instead of giving you guys some trades, why not educate you and teach you a bit before mentor tips launches, all right? And so I figured I'd do a class tonight. I'd do a course tonight on momentum indicators, on technical analysis. And I decided to choose a stochastics oscillator, which is something that people have asked me about before. Now, I haven't ever used it with trading with you guys, but I'm going to teach you guys exactly what it is, how it works, etc., etc., all right? And for the individuals that don't know me, I know there's a lot of new people here. My name is Reza. I am known as Ocean Sky on Instagram, on all of social media. And basically, I'm a 33-year-old young entrepreneur who I trade the markets. I've made millions and millions and millions and millions of dollars trading the financial markets, and then turn that money into multiple companies. And I have my own mentorship program where I teach individuals how to trade, how to replicate exactly what I did. I went from around $6,000–$7,000 to $25 million in a matter of 5–6 years. So essentially, I'm here to teach everyone how to do the exact same. And tonight, I'm doing a lesson on trading the financial markets, mastering the markets. If you don't know, we've been making trades on Periscope for over 100 days now, and we have never lost a trade. Every single trade has won. In fact, we're probably the top traders in the world at the moment. So if you want to learn how to become a millionaire with minimal amount of money, all right, then this is for you, okay? You need to get in on this. Now, guys, I want everybody to share the feed. I want every single one of you to share the feed, all right? So share the feed, please. Listen, guys, for the individuals that are talking about MyFX book can very easily be manipulated and faked. If you don't know that, nobody cares about MyFX book. Nobody cares about a past trading history. The reality is you want forward trading history. I trade live. I do it live, and the profits come live. I don't do none of that nonsense with MyFX book because I'm not trying to get customers to invest with me. I don't want anybody's money. I'm not trying to impress anybody. I'm trying to teach people. So I do not have a MyFX book because I don't need it. I don't need to brag. I don't need to show off. No one can do what I do. I do it live. I make the trades live. I call them live, and the trades go exactly the way I say they go. So I don't really need a MyFX book because I'm not trying to attain money from anyone, nor am I trying to impress anybody. So guys, with that being said, please, all I ask of you guys today is to get as many hearts coming as possible. Everyone tap the screen because I've really fallen behind on the heart race. In fact, the guy that was neck to neck with me is now 15 million hearts ahead of me. I don't know how he has 15 million hearts ahead of me, but he does. So guys, please share the feed right now. I want everyone to write this down first, okay? Write this down first. It's called the stochastics oscillator. All right? Guys, if you have questions, like I said, if you want to learn the entire thing, I developed mentor tips for a reason. I developed a course for a reason. I can't just sit here and answer 100 questions. I'm going to teach you guys stochastics tonight. I'm already losing my voice. I got to learn how to talk quietly. All right, everybody write this down, but I don't see anybody sharing the broadcast. I want everyone to share the broadcast. Come on, guys. Let me move out of the glare. Here you go. Everybody share the broadcast, please. Remember, I can see when you guys are inviting followers. Mark invited, Motorcycle Mafia invited followers. Closed on Mondays and followed, invited followers. Mark D47 invited followers. Tim Lariano shared it on Twitter. So guys, I can see who's actually sharing this, just to let you know. Everyone write this down and let me know when you're done. Everyone write this down and let me know when you're done, all right? I can't go any further than this, man. My back is stuck against the island. Write this all down. All right? In fact, something, I don't know if it'll work. If it works, fantastic. If it doesn't work, I don't know what to do. One of the guys sent me in a new, what do you call it? A new stand for the phone. So let's see if I can actually just hook this phone up. Let me see if I can hook this up. Does that look okay? Is that okay? Let me try to get this thing a little bit better for you guys. All right, is that good? All right. Let me just get some notes that I had from my Forex Bible. Now, everyone write this down. Okay, glare. Let me see what I can do about the glare. Hold on. Is that better? Is that good? Nothing I can do, guys. This is the best I can do. Everyone write this down. All right? Everybody write this down. I'm going to come on the other side here. I'll wait for you guys to finish. All right. Guys, share the feed as well. I'd appreciate if everybody could share the feed. All right, let me see if I can... let me come around here. So everybody write it down, write everything down. All right, guys. So if you write all this down, right now that formula makes no sense to you, all right? So I'm going to explain to you what that formula is, and I want you guys to write it down. Again, it's not going to make any sense to you right now, all right? It's not going to make any sense to you what that formula is until I'm done this lesson, all right? So the stochastics oscillator is essentially an oscillator which assists us in knowing when a specific instrument is overbought or oversold. All right? So let me know when you guys have written this down completely. Okay? When it's written down so I can grab the phone. All right? So everybody's got that. Right? All right, perfect. Perfect. So guys, the stochastic oscillator assists us in knowing when a specific instrument is overbought or oversold. Now, why do we want to know when a specific instrument is overbought or oversold? Well, we can essentially find out when that instrument is going to reverse. All right, if it's within a trend, we can find out if it's going to reverse or not. All right. Now, a lot of us have been asking, well, how do you make money in the Forex markets, right? How do you make money? How do you get wealthy? Well, you get wealthy by making good trades. right? And one of the ways is, again, it's very difficult for me to do this. Well, I don't know how I'm going to do this and hold this and work. It's difficult. This really sucks. But anyways, one of the ways that you make money is by buying a specific stock or currency or precious metal, all right, when it reaches a level of support, all right, or selling a specific, no, I'm not streaming on YouTube, or selling a specific stock, currency, or precious metal when it comes to a level of resistance. All right? So you want to sell. Everybody write this stuff down. You want to sell when prices come to resistance, and you want to buy when they come to support. All right? So that the stochastics oscillator assists us with that, because it's a technical momentum indicator. It's a technical momentum indicator, which means the momentum of price action, all right? The momentum of price action creates the movement in stochastics. So with pivot points or Fibonacci levels, all right, you have specific support and resistance entries set up where you can just go in or go out of the markets. All right? But with the stochastics oscillator, because it's momentum driven and it moves with price action, it's actually driven by the movement of the price itself. Another thing it helps us to do is it helps us to, like I said, identify a reversal in price. All right, guys, stop talking and writing nonsense and start paying attention. If you're here to learn, learn. If you're here to waste time, well, you're wasting your own time. And I won't repeat this stuff again, because I'm putting my time in right now to help you guys. So it identifies reversals. Okay? Guys, I'm not here to answer any questions right now. Please, don't ask me any questions. The stochastics oscillator ranges from 0 to 100. Alright? So, on the charts, it has a range on the side from 0 to 100. Above 80, anything above 80, when the stochastics indicator is above the 80 level, 80 and above is considered overbought. 20 and below is considered oversold. Alright? So anything above 80 is overbought, anything below 20 is considered oversold. Now guys, share the feed please. I'm asking you guys to kindly share this feed. Alright? Let me put the phone and attach it to this. So everybody share the feed if you can, guys. This is very valuable information. Alright? This is valuable information. So, technical momentum indicator, this is the formula that you've written down, helps to identify reversals. The range is from 0 to 100, and above 80 is overbought, below 20 is oversold. Alright? Now, how is the stochastics oscillator different than, for example, pivot points, or different from, for example, Fibonacci levels? Alright? So, this is your chart. Alright? Over here, you have all the prices. This is the value of the currency, or value of the specific stock. Over here, you've got the intervals. Now, depending on what time frame you're using, this could be in days, in months, in years, in minutes. So this is dates and price. Alright? Now, generally speaking, at the bottom of your chart, all right, you're going to have a segment. This area, if you drag on, if you add a stochastics indicator to it, your stochastics will be in a separate screen from your charts. All right? Now, let's say this is price. All right? Actually, let me draw it. So let's say this is your charts. All right? Red candle, red candle, red candle, terrible looking red candle. Okay? Then you got bullish movement with another big bearish day, and then bullish, and then bearish. All right? So that's your chart, all right? These are the candlesticks. This basically explains to us the movement of the price, all right? For those of you guys that already know this, know exactly what I'm talking about, all right? This is the movement of the price. Now, with Fibonacci, with pivot points, with raw support and resistance levels, we identify those levels with lines, horizontal lines drawn across the chart that are fixed. They're fixed lines. So, for example, if we were going to do the Fibonacci level, okay, we would very simply draw a line from here to here, and when you close it, it will draw a series of horizontal lines across the chart. These are fixed points in price. I actually drew this really well. It looks like MT4. These are fixed points on the chart. They do not move with the price action until it's deleted and redrawn. The same thing applies for pivot points or support and resistance. They're lines that actually just sit on the chart. And when price comes up to them, so if price, for example, comes up to here and fails, it's going to go down. You're going to sell it here. If it comes down to here and fails, you're going to buy it. So they're fixed ranges. They're fixed instrumental technical indicators. All right? However, with the stochastics oscillator, it's an oscillator. It's driven by momentum. It moves with price. Therefore, it requires its own section on the chart. Now, I'm just going to start drawing. Okay, so boom, boom. All right, so let's say that is our stochastics. As you can see, how prices move down, stochastics moves down. Prices move up, stochastics moves up. Prices come down, stochastics comes down. Prices go back up over here, stochastics goes back up. And as prices come down, stochastics starts to come down. All right? So as you can see, stochastics is an oscillator that moves with price. It helps to identify when a specific instrument, be it the Euro USD or Apple or Google or Microsoft, is oversold or overbought by following a certain formula, all right, which involves a calculation, calculating back up to 14 days or 14 previous sessions, all right? So as you can see, this stochastic line follows in harmony with price. Now the stochastics, all right, the stochastics has two different lines, okay? One is the K line, one is the D line, all right? So let me show you. All right? There's two lines on the stochastics indicator as well. All right? They allow us to know when a reversal is happening based on a crossover. And I'm going to explain that to you in depth. For example, you see there's two lines here, right? When one crosses over the other, okay? it signals a reversal. Okay? So you want to see the K line cross over or cross above the D line. Alright? The D line is not what you're looking for, the crossover. So if this is your K line, alright? Sorry, if that is your D line, the K line is where you will choose when a reversal occurs. So let's say this is the K line. It is coming up, it crossed over, that will signal a sell. When the K line crosses over, it signals a sell. Now it comes down in harmony with the D line, and it crosses over. That signals a buy. Comes back up, crosses over, signals a sell, and you get the point. So they move with the direction of the price, both of them. But when you get this crossover, all right, when you get this crossover is when you decide whether you should enter the trade or not. All right? Is this making sense to everybody so far? Is everybody okay with this so far? Guys, if I'm moving a little bit too fast, please let me know. All right? Boy, we lost 200 people already off this chat. Guys, I'm fixing this thing here, the rig. Everybody, can you share the feed? Can we get more people in here, guys? Can we get more people in here? Guys, come on, while I'm setting this up. Guys, come on, this is valuable information. Nobody in the world comes and does this kind of stuff for nothing. Let's keep the hearts going, guys. And let's share this feed. Come on, baby. All right. Let's share the feed. Everybody invite your followers. Everybody invite your followers. All right. So everybody understand up to now what's going on? Now I'm going to delete this. Everyone, if you've not drawn this down, start drawing it out. I'm going to give you a minute while I get myself some water. Everybody draw that out. Just take a moment to let that sink in. All right. Guys, don't ask me any questions, please. For the 100th time, please stop asking me questions. I cannot see the screen. I am not looking at the screen while I do this. I don't understand. If you want the in-depth stuff, it's going to be on the mentorship site. Mentortips.com has everything in depth. I'm just coming on here to help you guys out tonight, all right? Because I like you guys. So just go ahead and screenshot this. Do whatever you got to do. All right? Man, this thing, I can't get it to perfectly, I can't get this thing to perfectly do the charts. I'm trying to straighten this up the best as I can, but all right. Is this good? All right. Perfect. Guys, invite your followers. Invite your followers, all right? Invite your followers. All right. So, let's take a look at the setup of stochastics, all right? Let's take a look at the setup. Now, what I'm going to explain to you guys is, remember that formula? I want you guys to write this down. I want you guys to write 99% of the best traders in the world who say they're the best traders in the world, okay, do not know this formula or what this formula means. So remember this formula? Remember the formula I drew for you guys? You guys have it written down. This is what it means. So C, oh, better color, I need a better color. C equals the most recent, Jesus Christ, the most recent most recent closing price, okay, of that session. So C is the most recent closing price. So if you're looking at it on a 1 hour chart, 15-minute chart, whatever you're looking at, C is the most recent closing price. Alright? If you know mathematics, once you plug that formula in, you're going to see where C stands and how to calculate it yourself. In fact, it's pretty cool when you actually do the calculations. L14 is the low of the last 14 previous sessions. So L14 is the low of the last 14 previous sessions. Now when I say sessions, again, I'm referring to exactly what time frame. So if it was the last 4-hour time frame, last 4-hour candles, all right, and so on. Okay. Then we have H14, which is the exact same as this, but it's the high. Okay. H14 is the high, the highest price, essentially the highest price that was traded during that same 14-day or 14-period session. So the highest price got traded at any given moment during the last 14 sessions. All right? Everybody getting this? We then have percent D. All right? Percent D is 3-period moving average of percent K. All right? So percent D is the 3-period or 3-session moving average of percent K. That is what composes and what creates the algo that basically moves the stochastics oscillator. Now, write this all down. Let me know when you're done. Write this down, class. I feel like a teacher. Mr. Mokhtarian, Mr. Mokhtarian. Write it all down. Mr. Mokhtarian is getting a drink. Can everybody share the feed again, guys? Can everybody invite followers, please? Everybody invite your followers, please. One more time. Now, I'm going to erase this. Okay? Now, guys, there's going to be a 10,000 times better lesson with examples and videos on mentortips.com. Don't be upset or dissuaded if you're not understanding it right now. Don't worry about it. You will. Once again, here is the formula. Percent K equals 100. Oh, fucking shit. Sorry. Percent K does not equal that at all. I'm sorry if I swore. Percent K does not equal holy effing S. Sorry guys. As you can see, I struggle to help you guys. I'm doing my best to I'm doing my best, guys, with what I have, with these little dinky things. And my phone fell, guys. The phone fell from the rig. Guys, share the feed. I don't know how people could be leaving the feed. That's mind-boggling. That is mind-boggling. I don't know how to. It's very difficult to. It's not easy to write this down because I run out of space very quickly. All right. That's the formula there. Can you guys all see that? Guys, keep the hearts coming. Keep the hearts coming. All right. Keep the hearts coming. And share the feed. I have no idea how people are leaving this feed. If somebody was teaching me this when I was in my early 20s, I drop everything there is. All right, so that's the formula. All right, so let me draw out for you guys the structure and how we use it. So let's say this is the box in your MetaTrader 4. It'll say Stochastics up here. Once you bring the indicator on, and we will say K equals red, and we will say D equals blue. All right? So write this down, draw this out. So I'm just going to draw the stochastics. That is the D line. And then I'm going to draw the K line. All right? All right, and this is price. This is price, all right? So when you put the indicator on, you're going to have the number 100 up here and 0 over here. The number 100 refers to overbought. All right? Over sold. I'll let you guys draw this out. All right, I'll let you draw this out. Now, anytime a price is overbought or oversold, we are basically saying that the price has run out of steam. All right? It has run out of momentum. All right? So overbought, oversold means it has Overbought means it has run out of buying steam. So the bulls are running out of steam. And oversold simply refers to the opposite. The bears are running out of steam. All right, does that make sense? Now, when a specific instrument is overbought or oversold, it makes the reversal of that price much more likely than if prices were heading towards a specific point. However, there was no overbought or oversold indication. So when a specific instrument is overbought or oversold, it makes it a lot more likely that the price is going to reverse. Make sense? Okay, so what's going to happen if a specific stock or currency is heading towards the upwards trend and it loses its steam? What's going to happen to it? What is going to happen to it if it becomes overbought? If that specific instrument starts becoming overbought, what happens to it? What should happen to it? Well, if it has become overbought, we can slowly start to expect that that price is going to fall. Okay? That price is going to fall. Now, without the stochastics indicator, oscillator, or without that formula, we would not know if the specific currency or instrument is overbought or oversold. In fact, trends can go up for a long time or down for a long time. Price can move in one specific direction for an extremely long time. So by being able to identify when a price is overbought or oversold, it'll allow us to gauge the movement of that price and try to better understand when we can buy or when we can sell. Okay? So when price is moving upwards, all right, we want the stochastics indicator, stochastics oscillator, to head towards an overbought area while simultaneously approaching resistance. All right? So we want, if we have resistance here, this is resistance, right? The best opportunity for us is going to be when we have the combination of price moving up to resistance, and resistance is a point where price has tested that specific area multiple times and failed. You can see resistance here. Price came up, it failed, it came up, it failed, it came up, it failed. Now it's back to that point, and it is starting to signal overbought territories. So does that give me a good indication to start selling? Does that give us a good indication to start selling, guys? It does, right? It gives us a much better indication rather than not having the stochastics oscillator. I mean, we've made a ton of money just using support and resistance and trend lines. But by having this oscillator, it allows us to understand a lot better. All right? Now, a common mistake people make is they jump into the trade without evaluating these two major components. They identify, for example, that it says overbought or oversold, but price has not reached a point of support or resistance. In fact, let me give you guys a tip that causes a lot of people to fail when they use the stochastics oscillator. Prices, pay attention, can stay in overbought or oversold territory for a long time. Prices can stay in this region for up to 2-3 days. All right? It doesn't mean the moment it hits here, you got to sell it. You got to wait for two major things before you can sell. two extremely major things. And if you follow these, and actually my Forex dashboard that I created, the one that when you log into Mentor Tips, you'll see it. It'll tell you exactly, it analyzes every instrument, every millisecond, and tells you when it's overbought or oversold. But if you follow these two steps, you're going to be 99% more accurate than the average guy. Okay? Now, as we mentioned, prices can stay overbought or oversold for a significant amount of time, but two things can give us confirmation that yes, we can enter a trade. One of them is the crossover, all right, which is vital. We want the K line to cross over, all right? We want the K line to cross over. So, in this instance, when we had here, do you see the K line was actually moving in harmony, parallel to the D line. When they both approached the overbought area, all right, when they both approached the overbought area, they both started to make a little dip. But that doesn't give you a signal for entry, even if prices start to pull back a little bit. Because what can happen is this can dip down a little bit, and so can prices, and all of a sudden prices can turn right back around and push even higher. And this movement, this dip on the stochastics oscillator will actually do one of these. It'll start to dip down and then go like that. Well, not that high because it can't break out of the portion, but you get the point. It can come down and it can go right back up. So you want to make sure that you get a full crossover where the K red line crosses right over the D line, and at that point, from here is where you will execute. You see that area? They've already crossed over here, and they're coming down together. That's your number one signal. The number two signal is price coming up to resistance and falling. When price is falling from resistance, the K has crossed over the D, and stochastics is in the overbought area, you can sell. I want everyone to tell me, what are the three signals? What are the three magic signals of the stochastics indicator? Everyone tell me. What are the three magic areas or magic confirmations for stochastics oscillator? Come on, guys. This is class. I want everyone to pay attention. The reason I'm asking is to make sure you guys are paying attention. All right? So you need these major points. Now, as you can see, I'm going to show you something else here. Now, the chart automatically gives you 100 and 0. Those are the overbought and oversold territories. It does not plot anything else. So what I like to do is I like to take a horizontal line from my terminal or my trading software, whatever you use. You can choose to take a horizontal line, and I put it on the indicator itself. I put two of them. All right? And I give them two values. I gave the top one the value of 80. I give the bottom one the value of 20. And furthermore, I will put another line right through the center. Right through the center, and give it the value of 50. All right? Now, these are not included in stochastics. You have to manually add them. So I'm teaching you guys the way I do it. The reason I put the 80 line is because anything 80 and above is considered overbought. In fact, the stochastics oscillator will never, ever, ever reach the number 100. So it deceives people. Anything 80 and above is overbought. So if I draw the line out and give the value, I will always know when something is overbought. I don't need to be certain. I know it's overbought because it's above 80. Vice versa, when I draw the 20 line, I know when price, again, I drew these lines pretty bad because these should have been below 20, but my art is no need to be discussed here. When prices are below the 20 line, these should have been lower and higher, whatever. I know it's oversold. Stochastics will never come to the 0 line. So when it's below the 20 line, I already know it's oversold. All right? Now, why do I draw the 50% line? 99% of people, again, do not incorporate the 50% line. And I'll tell you why I do that. Because is it not common sense that if we're below the 50% line, we should be in a bearish trend? If we are above the 50% line, we should be in a bullish trend. So I'm going to teach you a strategy that is different from what is here. On a 4-hour chart only, what I do on a 4-hour chart, it will only work on a 4-hour time frame. If price, now this does not include, this has nothing to do with a crossover. I look for this. If price at any moment breaks below the 50% line, I know we're going to switch trends. I know that the trend is about to change. All right, so the beautiful thing about stochastics and indicators is you can start creating your own formulas and creating your own methods. So one thing that I do is I draw the 50% line and I put it on a 4-hour time frame because a 4-hour time frame is a big time frame. All right, so stochastic doesn't go like this on 4 hours. It moves very slowly. In fact, in 24 hours, it might move a little bit up. That's it. So once it's crossed over that 50% line up or down, we're almost guaranteed that, hey, we're about to change directions. So that gives me a good signal of whether we're bearish or we're bullish or we're about to change directions. And once again, the 80% line tells me we're already overbought, and the 20% line tells me that we are oversold. All right? And again, remember, markets can stay overbought or oversold for a significant amount of time. Therefore, you require the confirmation of price failing at support or at resistance with the crossover. So look, we got the K crossover. We got prices failing at support. We bought. Boom, 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 boom. Boom, 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 boom. Price goes up. We're making money like there's no tomorrow. Right? Now, the other main reason why you need to know, why you need these confirmations, is because you don't want to get stuck in this situation. Look what happened here. Prices went down, up, hit support, failed, stochastics, everything confirmed to go up. Prices come up, we got confirmation crossover. Now we sell. Prices come right down over to support. They start to go up. Stochastics crosses over. It starts to cross over. But then what happens to price? What happens to price? Let me redraw this. Why you guys tell me? What happens to price? Price dropped lower, right? Price dropped further. Now I'm going to teach you guys how to get out of this trade and even make money on it. All right? So we thought we're buying, damn it, we bought it here and it starts to drop on us. And stochastics start to drop. Now price comes and goes lower. The next low must be lower than the previous low. It establishes a new low. So if we were to make a trend line, it would look like this, downwards. However, when stochastics falls back down and comes to resistance over here, new point of support, The stochastics does not print a new low. You see that? Stochastics does not make a lower low from the previous low. So if you draw a trend line, it is going upwards, while this is going downwards. So all of a sudden, stochastics, even though they move together, is going upwards, price is going downwards. You know what that's called? That's called negative divergence. It's called negative divergence or positive divergence. Doesn't matter. It's called divergence. Okay? It's called divergence. Now, when you see this, when you have divergence, it's a very good indication that now the price is going to turn. Because stochastics did not print a lower low, even though prices did. Now as prices start to reverse and stochastic starts to reverse up again, when that crossover happens, boom, you buy, guaranteed profits. Alright? It's called divergence. And you can use divergence to get yourself out of a pickle and identify whether a price is reversing again. Okay? It's positive and negative divergence. It's essentially another chance for you to take a trade if you first got stopped out, but once again the price is pulled back. And although the price has made a new high, the stochastics did not. Alright? Stochastics did not. Now, once again, I'm going to remove all of this and I'm going to end the course with a couple notes. Alright? Alright? Now, there's two kinds of stochastics as well. What I taught you guys today is called slow stochastics. Alright? There's also something called fast stochastics. Now, I'll tell you why I do not ever want you to use slow stochastics. Fast stochastics. I do not want you to ever use fast. The reason is, fast is always going to give you more opportunities. Fast will have more crossovers and give you more opportunities. However, fast stochastics, alright, will give you more inaccurate entries because there's a lot more. It'll give you multiple trades where sometimes you have a false breakout. Slow stochastics does not give you as many trades and entries because it naturally moves a lot slower. But with that being said, okay, with that being said, slow stochastics will give you a much better, alright, much better entry. Now, in case you wanted to know what the K and D lines are, when you're entering your stochastics values on slow stochastic, on your MetaTrader or on any other platform, you're going to have to enter 3 different values. And I want you guys to start experimenting with these values. 15, 5, and 5. Now, there's many variations. Alright? There's many variations. One of these is percent K, the other one is the D line, and D slow. Now, percent K, alright, percent K is the raw, okay, hold on, it's the raw stochastics value. Alright? Percent D is the moving average of percent K. and percent D slope, all right, is the moving average of D. Of D. All right? Now, I want you guys to experiment with what I taught you guys. All right? There's going to be a lot more on mentortips.com itself. I have videos I'm creating for them and the whole 9 yards. A lot more in depth. Like you can combine stochastics with the RSI to make some powerful moves. You can change the values, etc., etc. All right? Okay? Now, once again, right before I leave, a quick refresher, just to remind you guys, all right? Just to remind you guys, this is the D line. Stochastics has two lines. D line, all right? Again, we're looking for oversold, overbought, K line. When K crosses over the D line and prices reach up to resistance, you sell. Now remember, you need a one candle confirmation. The candle should close. Do not ever take a position, even if it hits resistance and this crosses over. Do not ever take a position if the current period has not closed. Ever. Let the candle close. Prices comes back down. Failure, boom, we made all this money, yay. Crosses over again. Hit support, boom, we buy. We sell, we buy, sell all day long. Now, imagine the powerful tools I have taught you guys when it comes to, hold on. Imagine the powerful tools that I have taught you guys with Fibonacci, with pivot points, support and resistance trend lines. In fact, we've gone over 100 days without losing trades. Now I just added stochastics. Now imagine mastering stochastics and combining that with everything else I've taught you. That's where the power comes in, which is why I told you guys before, you guys have not seen anything yet. All right? No one has seen anything yet. Wait till I teach you guys RSI, CCI, Heiken Nashi, Ichimoku clouds. Guys, everything I've taught you guys that has made all this money is just the tip of the iceberg. All right? Now, you guys all know where to go. All right, if you want to be a part of the course, go to mentortips.com. Enter your information, your email address and information. I'm starting to send out all the emails already to individuals. All right? Again, it's $97 a month, non-stop Forex signals, non-stop webinars, okay? And I guarantee you that you're going to make more money in your first month with me than you've made your entire life working any occupation. All right? So go to mentortips.com right now and pre-register. Enter your information in. Enter everything you want. Your name, email address. All right? You're going to get Forex signals every day. Webinars. Courses. Mobile apps. And 1,000 things more. This is valued at over $10,000. All right? $97 will change your life. All right? If you have not pre-registered yet, right now, everyone, go to mentortips.com and pre-register. Put your information in. We've got less than 2 days until Mentor Tips is launched. And when it gets launched, I'm telling you, although I will be coming on Periscope, I will not be coming on as long or as often because I have to give my time to my mentees and my students. The way I look at it, $97 can change your life. If that $97 is not worth it to you, then there's no point in you ever trying to achieve success. Make sense? So guys, I want everyone to get ready. Mentor Tips is less than 2 days away. Go sign up right now. Pre-sign, put your information in. $97 a month. I'm going to be setting up PayPal, basically PayPal and credit card, and that's the only way we can take money for now. Okay? Guys, I also will have a couple shout outs I want to do. Okay? I have a couple shout outs I want to do. I want to shout out to Mr. Martin Langley, Mr. Jeremy Ray, Brian Fuentes, Danielle Lala, and Helen Tran. Alright? I want to give them a shout out because I read their letters today, wonderful letters, and because of the length of time that I have, the lack of length of time, I'm unable to discuss their letters, but they were amazingly touching letters. Thank you so much for the letters. I love you guys, and I'm blessed to have you guys a part of my life. With that being said, guys, let's do this, all right? Let's change our lives. A revolution is amongst us. Trust me, you have no idea how many hours I put into creating Mentor Tips. You have no clue what I want to teach. You have no clue how powerful this program is going to be. I guarantee you in the first 1 week, if you don't make enough money to pay for a 1-year subscription, I'll give you the money back and I'll make the entire site free for everyone. All right? Guys, let's get it. Everyone, mentortips.com, pre-register. I want to move all of you, as many of you as possible, onto my own platform where I don't have to deal with the lags of Periscope. I don't have to deal with holding this camera like this. I can make it professional, proper videos, a proper team. We have a family. I want this to be a family. I want you to belong. You understand what I mean? I want every single one of you to belong to something. Belong to a family. Belong to a group of individuals that have the exact same mind frame as you do, as I do. We can all make it together. We will make it together. Trust me. All right? Everyone, let's get it done now. All right? When I get off this, I want every single one of you guys to get on, pre-register. Let's kick ass. All right? Thank you for joining me tonight. I hope you understand Stochastics a lot more now. I love you with all my heart. God bless you. God bless your families. God bless America, Canada, Europe, Africa, Asia. Every single person out there. My love is with you. Love you, baby. Talk to you later. Bye, guys.